I want to talk next to people that are thinking about doing a short sale. There are a small number of consumers out there that are in distress. Either they didn't have flood insurance last year, they've lost their job, maybe they're a federal employee that got laid off and they can't make their payments. They're behind on their mortgage. They owe more on it than it's worth. Now, we've had a historical run-up in values that have paused over the last couple of years. And let's just assume you didn't do any refinancing. If you bought in, 2018, you're probably good. Bought in 2019, you bought in 2020, even 2021, you're probably good. And your lender will likely do what's called forbearance. If you're struggling, can't make your payment, you fall a little behind, call your lender. Don't just put your head in the sand, call your lender. They'll work with you. If you have a decent amount of equity, they'll probably do forbearance with you to hope you get back on your feet. Banks, Fed, nobody really wants foreclosure. They don't want to own the property, they want money. So foreclosures are never going to be the thing that they were back in the Great Recession, ever. The fix is in, they fixed it. They're not going to foreclose on people at the same pace. They're going to do everything they can to either sell the asset, give you forbearance until you get back on your feet because you've got equity, because they know the second they start foreclosing on homes, this domino effect. It inhibits their ability to loan. It inhibits appraisals. It pulls values down across the board. It just guts all these major financial institutions. So they use forbearance. COVID made them figure that out. If you're in that situation, you've got a short-term blip, call your lender. Have a conversation with them, see about forbearance. Secondly, if you aren't in that position, let's say that you don't have equity. Let's say that you're really behind. Let's say that you haven't been able to find a job. Let's say you've done forbearance and they're done with you doing forbearance. You should look at a short sale. We help customers avoid foreclosure, and we help customers improve their credit by doing it that versus letting it go all the way to foreclosure. If you are in distress, if you're someone who owes more on the home than it's worth, AKA you either refinance, took out money, took out equity, or you bought it maybe 2022, 2023, 2024, and you've had to move. Maybe you got laid off. Maybe you're the military or the Defense Department. Maybe you've got to be PCS'd out. All those things can happen, and lenders will work with you. And the real estate agent's fees are covered by the lender. If we help a client do a short sale, our services to market that property and to get paid will get paid for by the bank. They won't get paid for by the consumer. We work with some short sale negotiators so you get full transparency about what's going on. We always encourage you talking to a lawyer about your options. Every situation's different, but a short sale can be a way for somebody to recover a little bit quicker. So if you're in distress, behind on your payments, you've run out, you've used your forbearance, and you have to move, or you just don't see your home getting back to value, or a common one right now, your home took on some water. Your home got flooded. You didn't have flood insurance, and you've tried to make the repairs yourself, and now you're kind of stuck. All of those things are reasons why a bank will look at it and say, okay, we'll work with you on this. They don't want to go all the way to foreclosure because then you abandon the home. Then the home starts getting deferred maintenance. They know the domino effect that comes from a foreclosure. That home will pull the values down in the neighborhood. It'll attract vagrants. It'll hurt their other assets, the other homes they've loaned on. They don't want to do that. Okay, they want to sell it before it turns into an eyesore and becomes a domino effect of pulling values down in a neighborhood or a city. They learned their lesson. The foreclosure crisis crushed our real estate market. It's the biggest obstacle that now big banks will avoid because they know that's the thing that crushes our market. They will do everything they can to avoid foreclosure and work with you. They know a short sale will also bring them more money than a foreclosure. We're a judicial foreclosure state, meaning foreclosure takes a long time. They've got to hire lawyers. They've got to go through court. They've got to jump through a bunch of hoops. And all that time, bills are piling up on the house. Taxes are going in arrears. Okay, the maintenance isn't there. The utilities go off. Mold happens. Leaks happen. Vagrants happen. All those things they want to avoid. They want to do a short sale. They want to help you. So if that's you, go to DuncanDuo.com, fill out a home value request, fill out a cash offer, whatever it is. When we reach out, just tell us that you're behind, and we'll get a short sale experienced agent assigned to you to help you get to your next step so that you can recover quickly. There are people we help today that did short sales in the past. You can recover. You can recover within a few years doing a short sale. There's plenty of people that do that. We'd love to help you do it. Again, DuncanDuo.com.